Well, howdy, it's Mike again. It's been a long time since I've recorded one of these at home. I've been away on a long road trip. I will do Webby Rambles on that. I was gone for, I think, 32 days, 6,700 miles, and something that was much needed on many levels. And I'll get into that on a future one. But it's time to get back to work, man. We can't be slacking all the time. I did record one while I was on vacation, or not really vacation because I was working while I was doing the road trip for most of it. But and that was on my favorite books, and I hope you guys watched that one. It was there was a few that I left off. I will circle back to those accidentally. Um, and I will circle back to those in a future episode, not this one, because I wanted to make sure I didn't miss all of them. There were at least two or three that as soon as I recorded, I'm like, oh, I forgot that one and that one. Um, Things happen. So, what are we talking about today? Today, we are going to talk about Charles Schwab and, Bill O'Neill, founder of IBD. My mentor was just wrote it perfectly. It was one of the few that he did. I mean, no one's perfect like with their trades. Like this one, he pretty much did it exactly right. And at the same time, he was did the same thing with AOL, which is not in the market search database anymore, so we can't go over that one. But I mean, this was at 98, 99 time frame, and man, he just nailed both of those. And so I'm going to show you how he marked it up. Let me just share this real quick. Okay, so this is what we're going to be, talking about, this move, and this is out of the paper, Investors Business Daily. It was a little thing that they did back in the day that Bill worked on with Justin of marking up these charts, and they wrote a little bit about them. And we're republishing that partially because, I was kind of pushing for that because I think these are so valuable and I wanted them, it's kind of hard to find, and so Justin is working hard on redoing these because he's having to him and the staff are having to redo these from scratch because we don't have them in a file format that we could just recreate. So they're putting a lot of hard work into this. This is from the original version, and this is how Bill marked it up. And he pretty much traded it this way. He bought it down in that cup with handle and sold it into that climax. It's just beautiful, man. He made so much money on this, and just kudos to him. But we're going to walk through it, not the way he did it. You can see, his markings on, on here of what he was saying to do. Let me see. Can you see? Okay, yeah. Buying it down here, not selling into this climax action, or not. I would say not selling the whole thing. If you want to sell some, but I don't think he was selling any because it is too close to that pivot, and we'll get into that as we go along. And then ultimately, he was pretty much close to top ticking it as close as you'll ever get to selling into this climax top up here. So this was climax action. Oops, sorry, my cursor is in the wrong place. This is climax action here, and this is a climax top, and we'll get into that in a little bit. And so let me stop sharing that. So the reason why I'm doing Schwab this time is for a few reasons. One, really think we're in a 1990s type of market again, and for a long time, I hadn't been studying stocks from 1997 to 2000 because that was kind of a unique time frame that was different than anything we've had ever since. Now we're finally kind of getting back into that same, for lack of a better word, animal spirits of that time frame, and so it's worth dusting that off. And that was the first model book that I built, was the 1997 to 2000 model book. What a great experience, great learning experience. I built that with my good friend Ross Haber and Charles Harris. And that was, it was a ton of fun. All the future other model books that I just worked on with Charles, we always did model books together, and that was big undertaking. Sometimes it would take us a couple of years to build them, because there's a lot that goes into picking the right stock and the right time. And of course, Bill had his spin on it too, of what was going to go in. Not his spin, it was the model books were for him, so we had to do it his way. I would frankly do it differently. And that's why I'm doing this series in my own way. But you saw how he marked it up. And this is one that we would totally agree on, where, we would be starting it and where you would be ending this move. But I'm going to use the Quicksand Grateful Dead rules on, lean heavily on that, of holding this position or managing the position. And so if you don't know about that, you'll want to probably watch the Quicksand Grateful Dead rules. And let me just share with you, probably as good a time as ever, to just go through the channel, the YouTube channel that I've got. Let's see, share screen. One day I'll get good at this. Okay, so here's my YouTube channel, Webby 5150. I'm going to start putting these on other places like Spotify, and probably start putting some old ones, just post them on my Twitter handle or X handle, which is mwebster1971, and put them there too. But I'm going to probably keep just putting them on YouTube first, because it allows me to kind of see, are people watching them? Are they not? And I'm doing these, and I want you guys to watch them. And I'm frankly keep looking at the views going like, what is going on, man? Maybe I'm not doing a good job at these, but I think this information, I wish I had this stuff back in the day. But anyways, here is the YouTube channel. And then let's just walk through kind of how to get around it. So I put these things in playlists to make it easier. So if you don't want the playlist, you can just go down to this one, the Webby Rambles on Slight Return. For any of you Hendrix fans, you'll get that reference. And go down to the full podcast list. And we've got all of them from our very first one, the precedent analysis. Wow, I've been doing this for 6 months. Wow. Doing one a week, man. And all the way down to, Sugar in the Morning. Looks like I misordered something in here. I'm gonna have to change that around, because last time I checked, 31 comes before 32, but and 29 before. Man, I'm not good at this. Sorry, kids. There's only so much time in the day. So let's go back and see if you want to, make it a little bit easier to get around. The Hanging Out series, that's my favorite right now, like, because it's fun for me, because it's cool people that I get to talk to. So far we've done 4. We've done one with Don, Joe, Bob, and Matt, and I liked all of them for different reasons. And they're all very special conversations I really dug. And I've got some people I'm really looking forward to doing future ones on this. I've got a long list. Some people I haven't even reached out to ask yet. Other people have said yes. We just have to work out the schedule. But these aren't normal interviews. I don't have prepared questions or anything. There's just 2 questions, and they're music related. But it's just, having a conversation and then just seeing where it goes. And some people don't like it like that. Don't watch, And if you don't want to record a video with me because they're too all over the place, don't record it. Not gonna hurt my feelings. I got plenty of other things to do. So I think these are totally cool, and you'll learn something from each one of them. And I was trying to do this kind of in a way of Market Wizards, in that I love the Market Wizards series of books, and there's so much in there that you can get from different styles of trading. And it really bothers me when people are like, it's got to be my way. It's my way or the highway. If you don't position trade, you don't know what you're doing. You're an amateur. Or if you don't day trade, you don't know what you're doing. You're taking on too much risk, or anything in between. Or you don't trade like Buffett. It's like, no, man, find what works for you. And that's what this channel is about. I'm sharing what works for me. And I hope that you guys, I'm not an investment advisor. None of this is investment advice. This is just me trying to share with you guys, trying to help you out. So these will be expanded. I like to do about half of them with this hanging out, but we'll see. It's a big time and commitment for people because I'm not quick. All right, so now we've got the non-Webby rambles on. These are just this full playlist here of anything that I'm interested in. So a lot of these are just music related. This is my own personal things that I've either watched once and really dug and I wanted to keep it for myself, or I wanted to make sure that I watched it in the future. And I thought, I might as well share it with everyone. So, if you like this, clearly a lot of music, but there's also a lot of podcasts and things like that in there too that are non-music related. Or what I've put ones when I'm on a different person's podcast. I put it in here, but they kind of get buried. So I'm going to do a separate one, probably separate playlist with just podcasts, non-IBD podcasts that I do, as well as then a separate one for any IBD material, because this is a non-IBD channel. So let's just see the next one, the other ones. These are just kind of the miscellaneous. So I've got how I use Market Surge. I've definitely watched that. If you use Market Surge or you're thinking about using Market Surge, I would watch that and see how I use it. I'll probably do another one on that. And then my last one, my favorite books in here. Then we've got my non-stock related, which I also put the books in there because sometimes I'll put things in multiple categories. But these are my favorites, absolute favorites, my fear and my goals. And it's funny, on my road trip, I was just re-listening to the David Goggins books for like the fourth or fifth time. And oh my God, it's what I learned is I'm going to stop listening at high speed. And I always tell people to listen at high speed, and I can do it, or at least I thought I could do it. And sometimes I'll get up to 3 and 4x on some things, and then slow it down when I need to really understand something. But I'm doing that at the same time. I'm multitask, I multitask not because I think it's the best thing to do. It's not. Focusing in on one thing at a time is the best way. But I've never been able to do that. I would always have to be managing my portfolio, whether that was my own portfolio or Bill's portfolio or the family office that I was running, or now the swing trader, because I run, I pick all the stocks and everything for the IBD swing trader that I run with Justin. He takes care of all the hard work of marking up the charts and all of the record keeping. And it is so much work. It's unbelievable. You think that we just put something on and it just goes on. There's so much tedious work that he has to do. But, I guess I do the more fun thing of picking what goes on and off and how deep in the market and all that type of stuff. So I'm doing that at the same time as, I'm on IBD Live, which I'm on every Monday, Wednesday, and Friday, or I'm working on projects. And so I'm forced to multitask. So lots of times in the background, I'll have podcasts or books on. And I thought I was fine with a 2.5 or 3x speed. But this time, because I was, driving in the car and my better half was listening to it with me, and that drives her crazy, the fast speed that I had it on 1x. And oh my God, it was so much better that way. Really absorbed things that I don't think I did in the past. So you live and learn, man. Maybe I'll bump it up to 1.25 or 1.5, but I really just did not get the same out of it that I did before. And so I'm going to re-listen to them as soon as I'm done with David Goggins' second book, Never Finished. I'm going to go back and re-listen to his. That's what I tend to do, re-listen, and I get so much out of them. But anyways, of doing that. And so then next one is General Market Series. This is super important. Everything from the power trend to the Webby RSI that we may or may not touch on today. Follow throughs, probably the most important one, the 21-day from a stock and index related level, the 21-day, which is number 9. So I would watch those. Then the model book series, which this is going to be part of. This is gold. People don't. Oh my God. I may just stop sharing. Don't understand the lack of interest in the series. And I don't care. I'm going to keep doing them. That's why I'm doing another one today. The first one back, I'm doing a model book. People don't care about them because I look at the numbers, and I look at how long people watch and stuff. And I don't get it. This is everything. This is so important. I cannot stress it. This is preparing for the battle, so we're all warriors, right? We're going out into there's the old Battle for Investment Survival, one of Bill's favorite books. Not one of my favorite. I didn't like it. It was his favorite book. And I'm just saying it out loud for the first time. I read it. I didn't like it. It bored me. I didn't get anything out of it. Maybe I should re-listen to it, but or read it. He loved it. But that concept of battle for investment survival, I think, is such a good phrase. And that's what we're doing. We're preparing for battle. So you look at historical models of whatever you're trading. Now, if you're a value player, then go back and study those. If you buy in a totally different way, study it that way. But you want to go back and study, just like a golfer goes to the driving range, or football player or basketball player or baseball player, they're watching game tapes, or they're going they're just doing their drills and practicing. That's what this is. The model book series is preparing your eyes for the battlefield, because it's one of those things where you prepare and everything's perfect. There's no money involved. You want to get your mindset into it as if money's involved. I can do that. Like, it, after a while, you really get good at just really putting your using intellectual honesty to the next level and putting yourself in, like you're virtually there trading these stocks. And what would you do? Would you buy? Would you sell? Would you hold? Would you do a little bit of each? Like, what are you going to do? And if you get really in that mindset that your money is at risk and you're in this stock, or you're missing out on this move, then you'll get more out of it. So I don't get it. People don't like them. I'm just going to do what I think is going to be helpful for everyone. So I'm going to keep doing these. In fact, that'll probably be the bulk of them. Then there's the Webby inventions, because I like to invent stuff. Oops, forgot to share. That would help. I clearly will never do an episode on how to do a good podcast, because I don't know how. But here with this is things I've invented, pattern recognition. Took a decade of my life plus, and now I'm redoing it. This is the one. Okay, quicksand number 20. You should actually probably, if you don't know what those rules are, because we're going to assume that I'd probably pause this, watch number 20, and then come back and watch this one, frankly, because otherwise I'm going to have to regurgitate everything, and that's going to get old. I'll do a brief summary, but Webby RSI, again, I might touch on that here. Power trend, very important. The 3-month, well, I created all the other things I created on my own, but the power trend is something I created with Chuck and Justin. The 3-month RS rating, I guess here's the 21-day, the IPO base that I invented, the growth 250, which I invented, the composite rating, which I invented. Well, it's my invention, so that makes sense, right? And then my loss cutting strategy, number 25, I think that's very unique and would be helpful more so from, well, swing traders too, but more so position traders. And then let's see, that's all of them, right? Okay, so we got through that. So you're, what you should really do is go and watch that Webby Rambles on 21 day, whatever number I said, 25 or something like that. And just a reminder, I'm doing these for 2 reasons. One, for you, because I wanted a resource that was free. I do a lot of things at the firm. Some of it's free, but a lot of it is there's a fee involved. Frankly, I think our stuff is underpriced, and I tell that to people at work, but like once you kind of put a price on something, it's really hard to increase it without, making people upset, like little increases, but like major increases. But I really think our stuff, I think IBD Live, which again, like I said, I'm on Monday, Wednesday, and Friday. Plus, I create a watch list and a ready list, something I've been doing since the 90s. It was really my invention to come up with those two lists of a universe list, which is your full watch list, and then a ready list, which is a subset of those that are nearby points. And I spent like today, I spent 4 or 5 hours on that while I was in meetings, while I was, it and then that goes out to the viewers. And look, I'm not trying to sell. I don't get paid a dime for the show, man. It's just part of my gig, man. If you guys sign up for it, everyone watches. It doesn't impact my life. I just like it because it's fun. I get to share what I'm thinking about the market. That's funny that I don't get paid a dime for it. What are you going to do, man? There's 4 of us on the panel at any point, any day, and then on Fridays we always have a special guest that comes in, and that's always fun. Yeah, it's really cool to have someone different once a week to kind of get their spin on things, and we get some really cool people in there. But anyways, I don't know even if oh yeah, my point was, so that's a cost. It's really underpriced, but I also know that back when I started, I didn't even have money for books. Like, here's Bill's book. This wasn't the version that I bought, but I asked for in 1995. I asked for books for Christmas presents because I just, frankly, I was underwater every month. I was spending more, and not because I had a fancy lifestyle. I was just spending more money every month than I was bringing in. So spending money on stock stuff was just not in the cards for me. And I would go to the library I worked downtown at T. Rowe Price. And there was the downtown LA, and there was the library right across the street. So during lunch hour, I would go over there, and they had, this is before the internet, so this is 1993 to 1997. They just had so many resources, not just trading books. I was really more interested in, there was a product out there, I don't even know if they're still around, Value Line, which had charts on it and some information about the stock. And then it was okay, it wasn't great. And then they had these S&P tear sheets and other ways of researching, but I couldn't afford to pay for any services or anything because, like I said, I run the IBD swing trader with Justin, and there was a cost involved with that, and I wouldn't have had the money for that. So I wanted something. I'm really into karma. I believe one day karma will work out for me. Keep putting good karma out there, or at least go to people that I care about, like my family. And so, just keep trying to do the right thing. And so just wanted an outlet that was no time constraints. That's why these are as long as they are. Because if I did it at work, everyone would be saying, speed up, because I tend to babble. Whatever, it is what it is. If I knew how to do it, like straight and to the point, I would do it that way, but I don't. So if you don't like it, don't watch. But just don't tell me. Just turn it off. That's fine. I don't care. Well, I care, but because I think I could help you. But if you don't dig it, what can I do, man? I don't dig disco. There's nothing I can do about it. Well, the Bee Gees were okay. The John Travolta type stuff, but you know what I mean. So anyway, so I'm doing this for 2 reasons. I'm doing it for you guys because I wanted a free resource out there for you. And if you want more like stuff about the current market, I've got that is free every Friday. After the close, I do a stock market update that's available on YouTube. and I do that with Allie, but she's going to be going on maternity leave. So while she's away, I'll be doing it with Justin, which will be a ton of fun. And then once a month, we also do that's free, a swing trader update that's available on YouTube. And I try to post those things whenever I can on my Twitter handle, mwebster1971. So that's the first reason. But really, the primary reason why I'm doing these and what got me started was I realized, I'm not going to be around forever, and I wanted to have something for my kids and hopefully future grandkids if they decide to have kids. So my kids are going to be 24 later this year. I'm figuring they'll probably have kids in 6 or 7 years or so, and I wanted to have something to just give them the information that I have. So I've spent adult lifetime learning the skill set of really, I guess it would have started in my college years. So like from 19 and now I'm 54, learning whatever I've learned. And I wanted to be able to pass it on to them. And I was going to write a book. I hope to write a book, but I just don't really, frankly, have the time. So this is kind of a draft. I'll probably turn these into text and use them as to help me out to write that when I have time. But I wanted something for them because there was a time that they were kind of interested in the stock market. And so I would talk to them about it, but I never pushed them because I don't believe in doing that as a parent. I believe in letting your kids find their own path, whether you see them making mistakes and just try to let them, which isn't easy at all. But just let them find their own way. And I've got great kids, so I know that even if they, go on the wrong path at times, they'll circle back to their moral compass, and so you just have faith in your kids, and so again, like I said, I just didn't push them into trading. And I always wanted them to, one or both of them to end up working with me one day, but I just don't see that in the cards. So I wanted to have something for them. And if they never get interested in the market, I was hoping that maybe their kids one day will. And then there's something for them. And I was going to just record all these videos and just stick them on a cloud somewhere or on a hard drive. But I was really afraid that if they're on hard drives, they might get lost or, stolen or something like that. And if we put it on the cloud, maybe someone forgets to pay the monthly fee or forgets the password or something. I'm a worrywart. So I'm like, man, I'm going to do all this work, all this, and have it just go away. And so I wanted a piece. So, if I'm on my deathbed one day and I've left something for my kids. So that's what this is about, is leaving something for them. So please put up with me rambling, because if my mind starts thinking about something, I'll just talk about it, because sometimes that leads into non-stock related stories that I think might end up helping them. So thanks for putting up with it. Because I know people have been very patient. I've only had a few people to say some negative things, but besides that, everyone's so positive. And I read every single comment that is put on here. I haven't, I just keep trying to catch up, and I can't, man, which is a good problem, I guess, of responding to the comments. But thank you. And especially the long ones. I read them all. And like, I really, some really heavy stuff in there sometimes, but also some good suggestions and everything in between. And so thank you for that. And I appreciate you not doing the, making the rude comments. There's been a few, and it's like, dude, man, and look, don't. It's not cool. So anyways, we're about 30 minutes into it. So I guess good as time as any to actually get back to work. So let's refresh your memory about what we are doing. So again, for the old timers, you know what I'm doing right now. If you don't know what I'm doing right now, you think I'm just waving at you, then go back and watch some old ones and you'll get the joke. All right. So this is how Bill marked up the Charles Schwab, buying it out of this cup with handle, selling it into this climax. Oh, forgot to mention that the other reason why I'm doing this particular one is on IBD Live. maybe I mentioned it. Anyway, it's a long day. This is a work day. I'm recording this on August 14th, and it's been a long week. But on IBD Live, we're on Wednesdays, we tend to go over like an abbreviated version of this with a different model book. At least we're trying to do that on Wednesdays. And Rachel Fox, a coworker of mine, took that time a couple weeks ago when I did this on IBD Live and edited it down, and it's on our website, and I tweeted it out as well. It's on YouTube, and that's an abbreviated version. So if this is too long for you and you just want the Cliff Notes version, dude, no problem here. Just go there and watch that. But I'm going to just go through it at my own pace, and that we really can't do on that show because we're talking about what's the market doing. So it's really kind of a break from the normal programming. So let's get into this. So I'm going to shut this down, and we're going to pull up Market Surge, and move things around because I tend to mess stuff up. All right, so we are going to go over Schwab. So this is the NASDAQ during that time frame. This is 1998, September 16th, up here. Let me blow this chart up a little more. That's too much. Okay, right there. So this is what the market was doing. You've been in 97, you'd had a nice run up here, came down, go back, went up into new highs, and then you have this one wave down, two waves down action, and you're bouncing up here. You're back above your 21 day, and you don't know what's going to happen. So let's look and see what Schwab was doing at this point. Well, it's moving very quickly. So this is not a traditional buy point that Bill would use. I am now doing, as part of my thing, buying as things recover on the right side up through a 50 and a 200 day, but we'll save that for another episode. But frankly, I would have been buying it, on this day. But let's just walk through this one day at a time and see how this plays out. So it's coming down. Now it's going back up. So, realistically, I would have been shaken out in here. There's just no way I'm in this position with a low probability trade with a gap down like this. And what you want to do is put yourself, whenever you see a bar, a blue bar or a red bar, especially with a red bar, when you see it, that it closes up there like that, unless you make all your decisions at the close, which is a style of trading, and there's really nothing wrong with that. In fact, it's going to help you. I'm just throwing out a percent because Bill would always do that, but he was typically right when he would throw something out. Probably help you 80% of the time by waiting to the close. But I react throughout the day and put more weight on the close, obviously, than any time during the day. But realistically, when you're looking at a day, now let's go back to this day, the 17th. No, let's actually just go back to the prior day. So on this day, when most people are looking at it, what are you thinking? Right, nice supporting action off your 200 day, looks great. Now you have a line in the sand of the low of the day. Well, you know what? Frankly, you could have said that on this day. Nice shakeout, close at the highs. Now I'm going to put my line in the sand at the low of the day. Very logical. Next day is good. But then the next day, it drives through there. And at one point, you're down here. You're now down at your 200 day. Now, what are you thinking? Let's say you paid, $40 for it. Or let's just say you bought it at the close, 40.81. And I'm going to just do some math here. 39.06. Let's see. 39.06 minus we'll use the closing 40.56. 40.56. Wait, that's not right. That wasn't right. 36. I was using the last price. 36.69. Thank you. All of you who are like, Mike, it's not that. You got the price wrong. Thank you. But I couldn't hear you because I don't have a time machine. 40.56. 40. Oops. Minus 40.56 divided by 40.56. Okay, so 9, and if I did that right, which who knows if I did, close to 10% down from your close there. So are you really going to say that you're going to hold that? I call BS on you, man. No, you're not. Because if you are, then you have no risk management. Unless your risk management is you're going to let something go all the way down 50% in a day and wait for the close. I've seen things go down 50%. I've been in things that have been down 50% in a day. And it's just unrealistic. So you have to have some sort of line in the sand, and that would have gotten it, really. When the general market is like this, and this is why you need intellectual honesty to do this right. Down here, again, picture it down here. Not that it has this beautiful upside reversal closing back at the 21 day. When it was down there in this position, failing at the 21 day, undercutting all of this stuff, and you're not going to be selling? Nah, come on. All right. So enough of that. So we're going to move forward, see what happens. Okay. So regardless of what I'm doing, I'm going to go ahead and buy this back because it's breaking that little downtrend, this cup with handle. We'll get into that a little bit more in a bit. Let's see what the market's doing. I'm going to play some three-dimensional chess. Market's firming up. Your low is back above your 21 day. No reason not to. Now, of course, you've got this 50-day, the red line coming down, in a sharp downtrend. That's really not a great environment. And you're not underneath your 200 days. So you're not doing it in a big way, but, and you already had your follow through day in here. So we have that. This would have been day one. So day 1, 2, 3, 4, 5th day follow through on that day, right? And we're above the 21 days. So if you're not buying stuff, then you're not following the rules. Now, maybe you have different rules, but anyways, so you're buying something here, right? And then you've got a line there to add. So let's see how this plays out. And again, I know you guys are sitting there going, "What?" But it fails, and I'm sorry, I saw Bill so many times, like look at stuff and then see what ended up happening and say, I wouldn't buy it here because. But you really got to go through all of those becauses. Are you being honest with yourself or not? And look, I always say he was a billionaire, not me, but like it's a really big deal for me to look, like when you go through this, if you're preparing for the battlefield, then you've got to be honest with yourself and say, where would you really buy? Not just wait for the one that works and then say you're going to buy there and you're not going to buy any of the other ones, unless you have legitimate reasons. If you have legitimate reasons not to, then that's fine. But I'm adding a ton on this day, right? Because this looks super powerful. Let's go to the market. And the market is super powerful. Look, the market's up 3.68%, but this fails. We all know it fails, right? The Schwab fails, the market fails. But if are you going to sit here and say that you're not trading it because 50 days in a downtrend? No, come on. Okay, we'll go another day. Now we fail at the 50 day. So you see that you got resistance at the 200 day, the black line, and you got major resistance at the 50 day, which is in a decline. So at this point, now you actually have information. If you want to say that you're going to go completely to cash in that situation, no problem at all. Now, that would be a little probably excessive because back then volume was still good or accurate. In my opinion, and anyone who watches these knows I don't use volume, but volume was less than the prior day. It's not distribution day. It is down 2.27%, but your low is still above your 21 days. So it's not really a reason to sell everything. But if some of you were going to say, hey, you're really concerned about what folks call that death cross, where your 50 is going to cross through your 200, which is really a late signal, but it's, well, we could do an episode on that, the golden cross and the death cross. But at this point, I could legitimately see someone saying, you know what, I was worried about that. Now it's happening. I'm going to back away until it gets back above the high of this day. Totally legitimate. Let's go back to Schwab. Let's see what Schwab did on that day. Oh, it could have been worse, frankly. But with that said, I'm going to start backing away because you're down 7% on the day, and that's closing off your lows. Your closing range of 22%. You see that in the track price where it says CLS 22. That means that if you close at your peak, like you did the day before, then you're at 100. If you close at your low, like let's say over here on this day, 11% closing range because 0 would be at the bottom. But on this day, you're at 22. So that's weak, closes underneath your low of your breakout day, which your official breakout day was that day. So if you go back and watch my episode on my loss cutting strategy, you'll see how you would be selling some on this day, a big chunk of it. And really, if you get a close underneath here, then I'd be out for sure. Let's see. So an upside reversal there, that makes it really, really tricky, but you're still holding it. Now at this point, I would say you've tested it and you've had an upside reversal. If you've lived through that with some shares, I'd still hold it. Now, if you're completely out on the day before, it's not enough of a reason to buy back yet. But good action on the NASDAQ. I mean, some real supporting action. Hold on, I'm going to sneeze. I'm going to stop. How do I pause this? How about I just don't sneeze? Okay, I'll try to deal. Got to learn how to pause these things. Anyways. Okay, so let's see. I need an editor. But, that wouldn't really be a web. There have been some very nice folks who have offered to edit this stuff for me for free. But thank you very much. At this point, I'm not taking you guys up on it because, I just don't want to take advantage of anyone being just kind to me because it's so time consuming. And this is just, like I said, something I'm doing for you guys and for my kids. So leaving it unedited for now is going to be the way it is. So this day here, not great action, right? You're moving up, you stall as you're getting close to these highs. So I'm still not crazy about it. Let's go another day. So, I mean, it's not doing anything wrong. It's just not doing anything right either. Now that's kind of weak action. So now it's like resetting its handle. Okay. Now you've got to be out of it no matter what, no matter where you bought it, because now you've got a breakout failure, close underneath your 50-day, close underneath this level, There's no reason to still be in this. And let's see what the market is doing. Oh, well, that makes sense. The market totally ran into resistance there and fell apart. So if you were selling it all in here because of really on this day, or this day, the last 3 or 4 days, if you sold it all just because of what the general market was doing, or certainly sold everything on this day because now you're failing at your 21 day, totally legit. So we'll go back to the Schwab. But you're watching it because it was one of the first things to pop out. So that's what you want to be doing is looking at the ones that were holding up the best and moving right away. In market bottoms, you'll get a lot of follow-through days that end up failing, a lot of them. But you still want to pay attention to on each one of those follow-through days, what's the first stock that maybe moved the day before the follow-through day, or, or on the day or a couple days after. Those are typically your best merchandise. Now, there are exceptions. So this is a nice shakeout, right? Shakeout underneath the 50-day, closing at your highs. Let's see what, man, sorry for the yawn. Long day, man. But, oh, wow. So that's interesting. Market is holding up there. Nice upside reversal, but you failed on your follow through day. You haven't had a follow through day. Your high is well underneath your 21 day. 50's underneath your 200 day. Your 21's underneath your 50 and your 200 day. So just sitting and waiting for a follow through day is what you should be doing here. So let's just go forward until we get a follow through day. Ooh, it's getting ugly, getting ugly. Okay, now we're at a fresh low. So let's see, and this ends up being the key, what Schwab is doing when the market's at a fresh low. So what do you see? This is the most important part of what we're going to do today. So look at this base, this cup with handle, ugly cup with handle. The first time I looked at it, now I think it's beautiful. Look what's going on. What do you think I'm talking about? Right. Major divergence. When the market hits a fresh low, you see that one wave, two waves, three waves, third wave down, and we're closing well underneath there. And what did Schwab do? Schwab came down one bottom. Now here's your second bottom is well off of that. So what is that telling you? That's telling you that the folks in there that were in there buying over the last couple of weeks, they're not, blowing this stock out. They're supporting this stock, or even if they're not supporting it, they're not distributing it. The stock is either under accumulation or distribution or support, generally speaking. And so they're just kind of letting this one float around. Sure, it was down 5%, but it's still well off of your lows over here. So that's a big, big deal. So let's go forward a day. So now a big upside reversal down there, but it's still held above the 27.75. Let's go to the NASDAQ. And so you're up again, it's telling you that whenever the market turns, now we've got an upside reversal, or call it an upside reversal. I mean, it's not textbook, but where a shakeout where you're closing near your highs, that let's go back to the Schwab, that is also closing up near their highs. Now, if this was closing down in here, you would start to be losing that positive divergence, negative divergence. Okay. Let's see. All right. So this was day one, because this was our pink rally day. Day two. If you don't know what I'm talking about, we've got 2 episodes on follow through days that you can watch. Day 3, 4, day 5. Okay. Day 5 is your follow through day, up 4.5% on a pickup in volume. So now let's see what Schwab is doing. All right. So this is a standard breakout, right? Try to break out the day before, stalled a little bit. So, man, I am running on empty. Sorry, kids. That with this day, if you didn't have it already, you could be buying it here because you have your follow through day. Now, everyone thinks that Bill never bought before a follow through day. It's not true. He just wouldn't buy heavy. He would buy very selective. And so I don't remember if I don't know if I know, because I was working at the firm, but I wasn't working with him at this time. So I'm not sure if he was buying it on that day or waiting for this or waiting for the follow through day. But any of those would have been legitimate. So let's go back to the 9th. And, oops, not the 8th, the 9th. Let's see what the market was doing. Well, it's really hard in an environment like this when you're shaking out below something. Like if you study the market, lots of times when you shake out like this, you will turn and go back up. So legitimately, even though you didn't have a follow through, probing, not necessarily on this day, but on this day saying, okay, at least I know my exit, that for sure, if I go underneath this low, I've got to be out. But that's a mile down from there, because this is up 5% just on this day from there. But at least just saying, you know what, maybe you're going to nibble on some things in here. And as long as it really kind of stays above that area there, like just a little bit underneath there, that you'll stay with it. Now, that's kind of an advanced thing. And if you want to wait for the follow through day, you should wait for the follow through day. If you've been doing this for decades and you kind of seen this, or maybe even doing it for 5 years or so, and you kind of understand how the follow throughs work, then doing something like this is acceptable. If you have a stock that gives you a clear buy signal, which this did, because this is my favorite place to buy in a handle when you've already had a shakeout, because now you know that this should hold above this. Well, you can't let it go all the way down there if you're buying it here, because that was up 11%. So that would be well more than your 7% stop. So at least you're using your 50-day and your 200-day. And if you track price on this, you can see that the 50-day is 6.8% away. You can see it there, the second thing from the bottom. So that's 7% away if you're buying it there at the close. And I think that's a legitimate exit strategy of having your max loss tied in with your 50-day. So I think you can nibble there. Now, I wouldn't buy much. You haven't had a follow through day. If you're buying 1%, 2%, I'd say that's fine. Like, would you be plowing into this? No. The only way you're plowing into this is if you're using hindsight. But nibbling, sure. And then adding to it on a gap up, absolutely. Adding to it on that as it firmed up. So maybe now it's well, let's see what the market's doing. So the market is kind of well off of here. It's still in the upper half of this. So you call it kind of 50% retracement, which I need to do. Let's just see. So 50% retracement would be that low, that high. Let's call the mid somewhere in that, just eyeballing it. And you're in the what I call the northern hemisphere. So you're still in the strong part of that. So I would, consider nibbling a bit, and maybe you've built it up to a 7.5% position or something like that. Let's go forward a day. Now it's your traditional breakout, but what's weird is, you've moved all the way up here. You finally go through some resistance and you're stalling. That's the first really odd thing, but let's see what the market was doing. Okay, so here was your follow-through day, but still well underneath your 21-day and well underneath this. So you can't get too excited about it, right? But, let's go back to your Schwab. So you're adding to it here, but you're like, oh, man, there's probably better merchandise out there. Let's go out a day. Now here's your key day. So let's say you didn't buy any of it at all yet. And now you had the follow-through day of the day before. You didn't notice it. Let's go over to the market. You were doing the traditional thing of waiting for the follow-through day. Totally fine, totally legitimate. And you had the follow-through day yesterday, but it was a nail biter and you really didn't get a chance to buy stuff until right near the close, and you didn't get Schwab. And now the next day you're up 4%, 4.5%, and you're back above your 21-day. That's a legitimate time to really kind of load up on this, because it's held up so much better. This positive, this divergence that you had where you're low, this low, holding above this low, whereas on the market, this low was no match for that low, right? It just blew past it like it was not even there. So let's go forward another day. Not much going on there. Some running into some resistance. Let's just make sure that our low is holding above our 21-day. Okay, so, and I think I did an episode on this, that you're low above your 21-day for 3 days. 1, 2, 3, but you have to close up on it. So on this day here, let's go back to the 21st. This is where 1, 2, yeah. So the way I look at a moving average, whether it's a 10-day, a 5-day, 21-day, a 50-day, 200-day, whatever, is you have a few different levels. First, you got to get a close above it, which happened here. Then you got to get your low above it and close up on the day, which happens there. Then really to get true confirmation, it's not like you're waiting to act on this, but you're waiting for your third consecutive day with your low above your 21-day and closing up on it to really get serious about it. And so that's right there. So now let's go back to your Schwab and let's see what it's doing at that point. So now you're like, wow, what is going on? This is coming back in, but we know that about 50% of the stocks will pull back into their pivot area. This is your pivot area, and it's pulling back in there. So you're not really you're like, man, maybe I was wrong about this one. But again, I'm saying that I bought some here, at least 1.25% or maybe 2.5%. By the time I got there, I've got a 7.5% position. By this time, I've got to have a 10 or a 15% position. So now I'm like, okay, I'm up on this. It's coming in a bit, but is it doing enough? Now, there's different times where you want to be really tight with things, and that's not necessarily at this point. Like, let's go back to the market. I want to make sure I'm making sense. So when you're in a position like this where your market is acting strong, meaning you've had a few shakeouts, you've had your 3 waves down, you're back above your 50-day, at least on a closing basis. You had a downside reversal the day before, and it's kind of breaking your expectation with this nice move up on this day, and your low is above your 21-day for 3 days. So it's telling you your market environment is good, and the Schwab is acting well. And so you're trying to more position trade here out of the starting gate with the first ones that have moved. Now, if you were in the same position, and let's say this had happened weeks and weeks after the follow through day, and it was doing the same thing, I'd probably be reducing some because it's not your strongest horse. But this is giving a lot of indications that it's your strongest horse. So you want to err on the side of being forgiving, and it's still above your 21 days. So you want to give it some room. Now, if you're going to say you're going to trim a little bit because maybe you got carried away and bought too much, that would be me. Because I know me. I'm telling you 15%, but I know I've got max position, which is my weakness. It's also my strength. I get too heavy too quickly. So through this exercise, again, we're preparing for the battlefield. Let me just stop sharing for a second. Again, what you're doing is you're not trying to go through historically and top tick and buy at the bottom, sell at the top. What you're trying to do is train your brain into what would you do in the real battlefield, so that when you've got bullets flying at you, right, and you've got some wounds going on, you know what to do. It's the same thing as like military training. Like you've got the basics down. You've got to know where's your stop loss and all that stuff. But then this is kind of like advanced. I'm in the David Goggins mode. This is like the SEAL training type of stuff that you're doing. Like you're really getting prepared for when there's problems out there, and maybe you're busy. Maybe you've got a job or you're on a road trip or something, and you only have a few minutes a day to really like kind of look at your charts and decide what you're going to do. You need to be able to fall back on your training, and that's what we're doing. That's why everyone should watch all of these multiple times and do them on your own too, because you might have a totally different style than me. I'm doing this the way, I'm learning every time I do this. I'm reinforcing things in my mind, and I'm also keeping an open mind going, oh, maybe I should study that. And that's what you should do. Keep a little notepad. I've got a notepad next to me at all times, because I'll have different ideas and stuff that I want to mark down. And Bill did too. I keep a white notepad because Bill had a yellow notepad, and he was known for keeping a yellow notepad. I still have a bunch of his he would let me have them. And then afterwards, he said, well, you probably think there's something special in these. And most of the time, it would just be like work related stuff, like, oh, we need to, just kind of business stuff, not really stock stuff. But I still have a bunch that I've been saving to go through when I have some downtime. But just keep a notepad, and as you're doing these things, and jot down, oh, well, when it does this around the 21 day, maybe I should study that. And that's where you'll get a lot of great ideas. All right, so let's go back to this. Because I'm starving, and I think my better half is cooking some potato skins, and I can't wait to eat those. So I'll try to speed things up. So at this point, we're going to say we're going to keep the position, but down 2 days, it'll probably come down at a third. That's kind of typical. Let's see. Oh, well, it did and it didn't. It came down intraday underneath there, but it held above our 21 day. So you always want to pay attention to that. And if you'd sold any in here, I'd buy those shares back and use this as your line in the sand. And in fact, if you've missed this completely, then I would use that day there to just buy your position. Let's go one more day. And I would add to it there. So at this point, I would have to have at least a 15% position in there, if not a 17.5% position. And remember, we've talked through these that we're keeping our max position for this exercise at 25%. But you know what? Let's back away from the daily for a second. Let's go to the weekly and just make sure that we understand what's going on here. So this stock, in fact, let's go to a monthly. So one of the things that Bill would always do when I would go over stocks with him, which we did on a daily basis, but also on Sunday nights. And if he didn't know the stock, the first thing you do is go to the monthly chart and see, was there a time like this where it had a big move? And that's a sign that it has the potential to do it again. Doesn't mean it will. But if it had been just dead forever, he would really want to dig into is there something different at the company, a new product or something that has come out. So now we're looking at a daily or a weekly, and you also want to know, is the character normal, where it forms these bases, moves up, runs into trouble, forms a base, hopefully moves up, runs into trouble, and so on. So let's do a week by week analysis in here. This is something that that Bill invented. That's too blown up. Okay, where he would go week by week through the base and kind of analyze each week, and then let it tell you a story. And that's something he had been doing before I was working with him. But then the two of us, for a few years, worked on really trying to codify that and saying, okay, well, if this happens, give it a +1. If this happens, give it a -1. And sadly, he retired before we ever got a chance to finish that project. But when I have some time, I'm going to go back and dig that out and finish it, or maybe just start it from scratch. We will see. But let's walk through it the way we would have known. So you always want to start with your first week down off your closing high. That's how he would look at a base. So here is your closing high on 717. This is your first week down from there. And then you look at all the things, both price and volume. And again, this is from the 90s, so I'm still looking at the volume here. And you want to, what I would always used to do is print it off on a piece of paper, take a red pen and a blue pen, and mark each week. If it had something good, I'd mark it with a blue pen. If it had something bad, I'd mark it with a red pen. If it had both, I'd mark it with both. And if it was something very significant, I'd make a bunch of marks on it. And the point was, when I was done, I could look back at it and say, oh, well, this has got a lot of blue on it, or it's got a lot of red on it. And you can certainly do that with the annotation tools in Market Surge. That's probably the more efficient way of doing it, but old habits die hard. So speaking of die hard, man, listen, just because I believe in, I'm going to stop sharing. I believe in karma and I believe in sending good vibes out there. And one of my favorite actors is Bruce Willis, from the Die Hard series, but also really became a fan of him with Moonlighting, which was a TV show with Sybil Shepherd that he did in, it's been the 90s. And that's now finally available on Amazon Video. And just a great series, fun thing that was before he became, superstar. But anyways, you know, another reason why I'm doing these is because of what happened to, people like Bruce Willis. If you don't know, like he can't remember anything. He's still alive, but apparently from what I've seen, like he can't talk, he can't remember things, doesn't even know he was a movie star. I hope I'm hearing this stuff wrong, but it's a really spooky thing that can happen. And if you've seen it happen to people that you care about, it really changes the way you look at life. And so, anyways, just send good wishes to him and to his family, and can't hurt, right? What and if praying is your gig, send some prayers his way, and his family's way, because it's God, tough. Okay, so getting back to this, and of course, yes, like I said, if you didn't think I'd go off on a tangent today, well, you just found out I do. All right, so first week down off your closing high, closing range of 21%. That's bad. Closing range of 40% or higher when it's coming down is actually thought of as supporting action. So that's bad. Then the next thing you do is you look at the spread. Is the spread larger than average? Well, it looks at first glance, it looks larger than average. So larger than average spread is meaningful because it's a lot of price discovery. And so it's negative, very bad action on those two levels, the spread as well as the closing range. Then you go down, you look at the volume. Well, the volume is higher than anything it's had in a long time. So that's negative. That's just, so I'd mark it with a red pen, a few times. So let's reset things. Okay. So now we are looking at the next week. Well, kind of a small spread, volume really dried up. You had a 6% closing range, but it stopped at its 40-week line. So it's really not that bad. Maybe mark a little bit of a red, but the volume really dried up. So you're looking at your volume within the base, but you're also looking at your volume versus your prior week. And so then, since that dropped off so much and held your 40-week line, which is your black line, which is the same as the 200-day, not much to write home about. So really bad week here, just not much there. Now this week, really good action. Your volume is higher than your prior week, which is how we like to look at volume versus the average. At that point, it's your highest blue volume in the base, which is your only blue volume in the base. But you've got a high closing range, 78% closing range. And most importantly, it was a nice shakeout and closing back above your 40-week line. So I'd mark that with a blue pen, very good. Next week is an inside week with a dry up in volume, nothing to write home about there. Yes, this is a bad closing range, but nothing to write home about there. Next week is actually a bad week on price action. You couldn't hold your 50-day or your 10-week and your 200-day or your 40-week like the prior week. But what's worse about it is it did take out the highs of the prior week and closed all the way back down there with a weak closing range, an 18% closing range. So that's your second worst week in there. And at first glance, you'd be like, oh, it's a blue week. No. Really think through what's happening there. It was trying to go and it couldn't, and it came back down in there. Now your next week, it's a bad week. I would actually say the prior week is worse, even though this one's down 8.5%. Well, nah, this one's worse. But that was just my way of saying that that's really, it's a subtle thing. But now your high is stuck underneath your 40-week, closing at your lows, 15% closing range. Volume is your highest volume in the base besides your first week, so really negative action. But now, here's the key. You've got this week that undercuts all this area. This is what, a lot of people will short at that point, incorrectly short as it breaks into new lows and chase it down there. And it's getting supported with a nice closing range of 47%. So just shy of 50 or the midpoint on a pickup in volume after shaking out. Like that is key. Like that is so good. As bad as this week was here, this is better because it's your bottom week. You always want to look at, a few things. You want to look at your biggest spread, your biggest up week, your biggest down week, your biggest volume up, your biggest volume down, your pivot week, of course, but you always want to look at your bottom week. And your bottom week here is very important. It's showing clear supporting action. From there, that really confirms that support is that you moved up over the next couple of weeks. So these are both clearly good weeks. Volumes, nothing to write home about there. That one picked up a little bit better, and it was nice. These bigger spreads closing at your highs, good action. Then this week, you kind of run into a little resistance, which you're going to. I mean, you just went from, let me refresh this. You went from down here all the way up to here. Like you do want some back and forth and to make sure that that some people are shaken out of things. And that's what happens. You get this week here, 46% closing range, so not really that bad. Support at your 10 week and your 40 week. And here, this is your key week. This is your most important week in the entire base. At first glance, it was this week, but now as you go forward, you're saying, okay, now I've got another week in here. This is your most important week in this entire thing with this big shakeout, closing near your highs with a 95% closing range, and more importantly, closing back above those moving averages and down just fractionally. That is saying, buy me. It is a huge tell on a weekly. And then, of course, your breakout week, Bill would always insist that the volume has to be higher than your prior week, and it certainly was. So on a week-by-week analysis, that's great. And then, of course, you have your confirmation with your RS line here moving up and to the right. So that's good. And we are going to have to speed things up or I will fall asleep on you guys, and I don't want to do that. So let's go back to the daily. So we're going to do a few things. We're going to pay attention to our 21-day, and we, as usual, we are going to pay attention to our Quicksand Grateful Dead. And for this episode, we're going to lean heavily on the daily. And I've talked on recent episodes of finding out that perfect time to switch over to the weekly, and still working on that. So let's just kind of go through and look for any problems. So it's coming back into the pivot area, but it's still above your 21-day. So it's not giving you any true sell signals yet. Some good action. So it likes to wiggle and wobble. So you're trying not to add until here, because now you're afraid of getting chopped up, because really since this day, it's been kind of a chop zone. Let's see what the market is doing. Let's see. Okay, so it was the market was actually a lot stronger during this than it was, but it's probably making up for the fact that the things that are moving off the bottom are probably short squeezes and stuff, versus this one had been being held up. So now was holding up. So now you get this place where you want to add, because now this should stay above this area, because it was just testing around and chopping around, which happens a lot around pivots. Now it's clearly moving up, so you can move your stop up to the low here. You don't have to let it go all the way into here or into here. You can put it there. It's up 11% in 13 days. So let's take a look. Now it's just moving higher. So at this point on this day, I would have made sure there was a 17% or maybe even a 20% position. But let's just go with 17 and a half. Not adding on that day because it's just up and out of there. Maybe adding there, but that's a tough add because it's so extended. So still probably sitting with my 17.5% position, looking for a place to enter it. Now, even though it's not giving you the, let's just go back to 15 days. Because remember, the rule is it has to be up 20% within 3 weeks, or which equates to 15 days from the pivot to hold it for that 8-week rule. But in spirit, this is on 15 days, it's up 14%. But on the 16th day, it's up 25%. So this is a difference between a computer and a person. I would say in spirit, this is something now that you want to hold for 8 weeks, unless that's the whole power from pivot thing. There was a bill thing that he came up with in the 60s I should probably do one on that. I'm going to jot a note, power from pivot. So this one is moved up quickly in that green zone, right? The 20 to 25% profit taking, but it did it so quickly that we want to try to hold it for 8 weeks, unless it totally round trips at this point down to here, and then we're down on it. So let's go forward. Now it just keeps building. Okay, here it is on a Friday. Let's see what it looks like on a weekly. Looking good there. We'll move forward. So now we're using our 8 weeks. So we're 18 days out of there. So we still have time. Just letting this thing move around. Trying to hold those shares. So this is down more days in a row than what you would want. Typically, anything more than 3 days down bothers me. So meaning this day here and this day, it bothers me that it still went lower. But when our RS line is still holding above this, which is a good sign. So let's look at what the market's doing. So the market was stalling out and coming in a bit. So it makes more sense that it's coming in. But what Bill would do is he would say, okay, as something is coming down, he would look at the percent that it was down and say a different way that it's getting support. So let's walk through this. On this day, it's down 7%. Then it's only down 2%. So this is kind of the problem child. This one was down 3%. So typically what you want it to go from like 7 to 5 to 3%. So this was a bad day and this was a bad day because they're both down 3%. So that is not good action. But what's good about it is that it held above your 21-day and the RS line held. But what is ideal is on this 5th day that you're hardly down. So it's really supporting action, and you can get that sense that it is, that's odd that fell, but that it wants to go higher or at least go sideways, because what had happened is it was down so much over these days, and really the 3% and the 3% at this point, feels like it's under massive distribution and on that day and that day, but then it firms up. So this is probably your most important day since right here. All right, so let's go to your next one. Okay, so this is exactly what you would expect. It was set up to do this. So this tells you in the back of your mind that you're like, okay, well, this is now behaving well in normal and natural. And so you're always asking yourself, is my stock acting normal and natural, or stronger than normal and natural, or weaker? And so for these 2 days, it was acting weaker than normal and natural. This was classic and this is classic. A little odd that you didn't have a pickup in volume when you're up almost 10%, but let's see what the weekly looks like. Almost unchanged there, some support. Okay, so that looks good. Let's go forward. Little stalling. Tightening up. A little worrisome because I would have been adding to it up there and probably still sitting with those ads at this point. But frankly, that bothers me a little bit. But now we have a declining tops line. So if it goes through there, we're going to want to add to it. Oh, goes through there. So we want to add to it. So we were at 17.5% over there or whatever. On this day here, we would have wanted to make it, I should have said, at least 20%, if not 22%. And then on this day, by this point, you have a max position because your ultimate stop, on a lot of the shares would probably be there, as well as your 21 day. But also we're trying to hold this for 8 weeks. So your original shares, you're only 29 days into this from your pivot point. So you're trying to hold it for that 40. So you got to have a max position there. A little downside reversal, but still normal. Okay, normal action. Not normal. Like that's a little worrisome, right? But this is right after Thanksgiving, looks like. Outside day, downside reversal. You expect it to come in. You're expecting it to come in and you want to see how it handles itself around the 21 day. If you've gotten top heavy, maybe you're selling, some here. So if I had a 25% position and I've got that, I'm probably bringing it into a 20% position, because we can't sell those first 15% because we're holding it for 8 weeks. And so we've got 3 more or 7 more days. Okay, so it's come in. I'm not adding on this day, even though we got support at the 21 day, but I'm glad that I sold some here. So I'm at a 20% position because I sold 5% there, hoping that I'm not going to sell any more there because it's holding the 21 day. But more importantly, it gapped down and it gapped down, but it was within expectations because the way it closed the day before, you expect it to come in. Now we'll go forward to my sister's birthday. And I know, Sherry, you're probably watching this because you watch every weekend and you send the nicest text to me. My sister, who's a school teacher, who's never traded a stock in her life and probably never will, which is totally fine. She watches each one of these. And what a great big sister she is. And will send me like detailed things, always positive, like, oh, I really liked when you said this. And she's a school teacher and she's like, oh, you're teaching. And then she'll use like teaching terms and things that I don't even know. And my parents watched too. And they were both, my mother was a teacher and then a principal, and my father was a Marine and then a teacher and then a basketball coach. And in fact, he took his basketball coaching to the same level that I take my trading. And if you know the WNBA at all, he was the coach, the high school coach of probably the best person to ever come through the WNBA. And who is that? Yeah, Diana Taurasi. And I just saw that there's a new video out on Prime, I think a series on Amazon Prime. No, Amazon Prime is not paying me. But if you want to, Jeff Bezos, I'd be happy to just hang out on your yacht for a weekend or so, and you can pay me that way. But anyways, man, Bezos is really taking care of his health. This retirement has really worked for him, so I'm happy for him. What a great retailer. So, and just a forward thinker. He really thinks, years and decades out versus most retailers and any CEOs just kind of think in terms of this quarter. They've got to make it to this quarter. And he was one of the very few who could look out into the future. But anyways, boy, do I get off on tangents. More so when I'm tired. And let me say, I'm just trying to keep my eyes open right now. Oh my God. I should have some coffee. Okay. So it's looking good. Honestly, probably not buying any more here, even though it bounced off the 21 day. It's been sloppy, really sloppy in this area, and kind of wide and loose, and you just don't know what it's going to do. So I want it to tighten up before. I already got a 20% position, and you want to reserve your max 25 for when everything is really working. So let's go forward. It's coming in a little bit. Okay, now it's tightening up. So look at the spread, the difference between the high and the low. It's getting smaller and smaller. That is telling you it's at equilibrium, right? Because when you're on a day like this, it's not at equilibrium. That's showing power. When you're on a day like this, that's showing power too, but in the opposite direction, the selling pressure. So because those wide spreads and closing at the highs and the lows, so you really wanted it to tighten up, but still not enough of a reason to buy it. Tightening up more. That's kind of a setup-ish day. We'll do a episode on setup days. Still tightening up. You see how different it is? And look at that RS line is holding in there. It did tag the line here. Ooh, okay. Couple things. Okay, now we're at 40 days. So 40 days, 40 nights for you fans of Muddy Waters. Great song. And Johnny Lang used to do that in concert sometimes. And a song that most people don't do. Did a great job with that. And sending good vibes to him and his vocal cord issues. So we're now at 40 days, so our 8-week time frame. So we've lived through that, and now that 8-week power from pivot rule is no longer in play. Now you look at it in the way Bill would look at it and say, okay, I'm out 8 weeks. Do I want to sell it, or do I want to try to hold for a bigger move? And I know him. He would have wanted to hold for a bigger move at this point if he was implementing that rule, which he wouldn't have because it didn't trigger exactly right. And he was very much more rigid about certain things. But still, it did it in spirit, and it's tightening up. So now I'm looking and saying, okay, I made it through the 8 weeks. If it can make it above this area here, I'm going to bring this back up to maybe a 22.5% position. And if it can make it above this old mark high, then I'll put it to a 25% max position, and I'll use my 21 day as a way of scaling out. And then the low of this day, the supporting day, to scale out probably the rest of it, as well as using my RS line. So let's go back to this day where it did trigger that. So let's see. Okay, so now it triggered our Quicksand Grateful Dead rules. So that was then in conflict with we were holding it for 8 weeks unless we're down on it. But rules are rules, and that is breaking there. So I think I'd said I had a 17.5% position. Or let's just say, because I can't remember exactly what I said, but let's say I had said I had a 20% position. Well, coming into this day, because that RS line triggered the quick, you want to sell some of that. So you want to take some action on there. And this is where it gets tricky when you're doing a couple different rules. And I'll have to figure out a more elegant way of dealing with this. That you can either just say, I'm going to use the Quicksand Grateful Dead rules, or I'm just going to use the power from pivot, or I'm going to use a blend. And frankly, I would use a blend. And so I have to take some action here. And so again, with a Quicksand Grateful Dead, it would be selling in increments of 5%. Because if you recall, if you go back to that episode, that your max position would be 25%. And then you could sell it down to 15%, but you're holding 15% of it until you get Quicksand Grateful Dead. Again, just to refresh your memory, a quick is when your RS line goes through the short-term moving average. If it goes lower than that, so then you would sell 5% or bring it from a 15% down to a 10%. And if the RS line goes below that level, then it would go down to sell another 5%, bring that down to 10%. And if that RS line went through this, that's your Grateful Dead signal. And then that would say to sell the whole thing. So again, we're in this conflict where we said we had a 20% position, just keep it simple, keep the math easy, 20% position coming into this day. And we're trying to hold 15% of that in using Bill's power from pivot rules. And we're only 34 days into it. We need to get to 40 days. So what do? We've got to take some action, right? Because you've got a sell signal here. So knowing that really would have been a sell from 15% down to 10%, that's a 5% hit in your position size. I'm going to do that here. So these are the things as you go through it, you sometimes get these edge cases where you have to think through what would be the proper thing to do. So doing it that way would be the proper thing to do. Now, let's say we weren't doing the power from pivot at all, and we were just using the Quicksand Grateful Dead rules. Then at this point, you'd have to be down to a 10% position, because the Quicksand Grateful Dead rules would have you at a 15% max, right at this point. And then you would have to sell 5% of that to get, because of the quick rule, meaning the RS line is through your short-term moving average. So depending on how you're going to do this, you would do 10%, you would be owning 10%, or you'd be owning 15%. And you know what? I frankly put more weight into my Quicksand Grateful Dead rules than Bill's 8-week rule. Just is what it is. So even knowing it's going to hurt me, knowing that, I'm going to say from my position, I'm going to be using that, meaning I can only have a 10% position. But if I was using a blend, I would be at 15%, which is going to hurt me because it goes higher. But I'm just being intellectually honest. And that's just what you need to do when you go through these things, is just think through competing rules. And that's why it's best to kind of keep it as simple as possible. So I'll probably try to write out some very clear rules for that in the future. But again, two ways of looking at this. If you're using Bill's 8-week rule, power from pivot, you're at 15%. If you're using only the Webby's Quicksand Grateful Dead rules, then you're at 10%. And let's see what happens. So if I was at 10%, I'd want to bring it back up to 15% on this day, because your RS line is back above its moving average, which is one of the requirements for increasing it back up. And then 2, I would use that low as it. So now we've rectified them both. We're both at 15%. But it was important to go through that exercise, because I might not be smart, but I'm intellectually honest. Might not be a billionaire, but I'm intellectually honest. Okay, so now we've got to add onto here, and you've got the volume coming in. It's gone back above our shelf. We're at a 15% position. It's tightened up. So now it's unrealistic to say I'm going from a 15 to a 25 all in one day, but I'm going to go at least from a 15 to a 20% position, and then saying that if I make it back over there, that I'll make it back to my max position, using the low of this day as a stop for some of those. Obviously, the RS line for that 15% of it. So let's go through. Okay, so now we're back at a 25% max. That was a little odd. I would have expected, let's see what the market's doing. That's unusual. Okay, so the market was getting hit. Okay, that makes more sense. All right, because why I was saying that is on a day like that, you would have expected the next day to be something like this. That would have been normal and natural, like a close like that, but it didn't happen. Okay, so it did, and probably the market probably came back up. Yep, market came back up. All right, normal and natural, still at our 25. We haven't done anything. RS line is smoking. 21 day is our guide. Look at how that 21 day is holding it. When not all stocks will do that. When they do, pay close attention. Now, maybe you have a pet moving average. Maybe it's a 10 day, maybe it's a 5 day. There's nothing wrong with those. Maybe it's an 8 day exponential. Nothing wrong with that. Maybe it's an 18 day, 34 day, whatever. If a stock or an index is holding that for a while, which this was doing this whole time, then pay attention to it, because the people that are in there are paying attention to it clearly. Holy smokes. Was not expecting that, because I purge what I know that is going to happen. Was not expecting that. Is really powerful move in there. So it's right before Christmas, and some weird moves up and down can happen, because you got to remember it's the end of the year. Sometimes winning positions get pushed by the portfolio managers to make them work even better, to make their year look really good. The other thing is a lot of participants are on vacation, so it's a lot easier to move things up and down. So it's not a time to just plow, but to just know that big moves tend to happen in the last couple weeks of the market. And then the first week of January is probably the hardest week of the year. We'll have to do an episode on that. So this is climax action, but not a climax top. We'll get into that in a second. So I'm just trying to do my best to hold on, because it's not doing anything wrong. And that's what Bill was great at, just holding if it's not doing anything wrong. It's just powerful, 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 and still not selling, into that. It's certainly climax. Now, if we have time, we'll I'm saying, just based off of this, that not selling into that, because we're not using other tools. But if we have time, which I don't think we're going to have time, we'll go through the Webby RSI, and I'll probably have to do that on the next one, or a future one, because there's some techniques of selling into climax type action. Now, it's not a climax top, because we'll go out to the end of this week. That's an extra day, but still, let's just go to the week. So that wasn't a climax top, because it's only 13 weeks out of this base. And what Bill would say is you really want it to be 18 weeks or more out of your basing structure. Now, we should probably do more work on that, but frankly, it's in the ballpark of 18 weeks, because I've done work with him on it and did my own work, and that's about right. But it's just too early on for it to be truly a climax top. Climax tops, when they happen, they tend to not go higher from there. But it was certainly climax action. So if you like to sell into strength, man, it's giving you every signal to do that. And again, we could use the Webby RSI for that. So now I'm saying I'm just trying to live through a test of the 21 day, because it looks like it's going to do that. Because think of this as an outside day, a negative outside day, tried to move and it couldn't. And again, this is your trickiest week of the year. Okay, supporting action at the 21 day. If you sold any in here into strength, more power to you. Then I would be using this day, even though it didn't close up, as support at the 21 day to start nibbling back into it. So let's say you brought it down to a 15% position or something, like adding a little bit into that, just a little, using your 21 day as your, so if you buy some here, I would use the 21 day or the low of this day as a sell signal. So let's say if you had it at 15%, maybe make it 16 or 17.5% there. Okay, so if you'd done that there, then you would add more. So let's say you had sold a bunch into here. You're buying this back, probably up to a 20% position. And then through there, you would probably make it back to a 22 or 25% max position. Holding in tight. Okay, it's doing it. You're probably at a max position. Doesn't want to go yet. Okay, so it's holding that 21 day. Holding the 21 barely. This is normal action because you can remember it had climax action and just regaining this. So how I would do it is I would go from here to here and just say that is your run, and you want to stay in the top half of that. So let's just use the 40.58 plus 68.50 divided by 2, 54.54. So that is saying the 54.54 is your 50% retracement, and something I use all the time on an intraday basis, daily basis, weekly, monthly, indexes, you name it. Should do a podcast on that. But anyways, 54.54. What was the low here? 50.88. So a lot lower than the midpoint, but then it closed up at the midpoint. And it's not a hard and fast area, but you want to be trading in the northern hemisphere. So 54 would be, what is the close there? 54.25. So a little bit above it at the highs. So basically in here, that's your 50% retracement. So trading up in this upper half is telling you that it's still strong, and it can settle down there. It could stay there for a little while, be fine. Still just going back and forth. It's really holding that 21 day. So if it breaks that 21 day, man, we've got to really pay attention to that. RS line is holding in there. So this point, now that it's breaking, clearly breaking this area of resistance, you got to have a max. You have to have had a max position. You probably tried for max position there at the high. I would have, and maybe backed away from some of that here. So maybe you made it a 25% position here, and then on this day you had to bring it back down to a 20. That's the reality. I probably would have done that over here too. Over here, like in here, I'm going to get chopped up, but I'm keeping that core 15% and letting it, move around, because I'm using the Quicksand Grateful Dead rules, which is the RS line being above this gold line here, as my base case for that 15%. So it's that last 10% I'm trying to play with. And so here I've got to have it to a max, even if I've been chopped up a little bit. Let's go forward. Okay, still holding the 21 day, and the RS line is holding that. Let's look at the weekly. Normal. Let's see. Holding the 21 day. Oh, our first break of the 21 day. So that's a little odd, right? We've got a bunch of days in a row down. 1, 2, 3, 4, 5, 6, 7, 8 days in a row down, and our first break of the 21 day, closing below it. So I've got to sell. So I'm going to bring this, if it was a 25% position, bringing this down to, I got to bring it down to a 15% position. I mean, this is our first break of the 21 day. I know this is still above it, but yeah, I mean, I know it goes higher, but I'm putting that out of my mind. Let's see what the market is doing. Oh, that makes more sense. So the market's coming in, more of a reason to reduce it, because you get a serious break of your 21 day. What is wrong with me? Charles Schwab. Okay. So we might get a quick signal today. No? Oh, upside reversal. Okay. Upside reversal at the 21 day, but frankly, it's not enough of after all those down days in a row, not enough of a reason for me to buy those shares back. So I'm still at a 15% and I'm really waiting for kind of like that. So you don't have to, when you're drawing a downtrend, you don't have to make a tangent with every peak. You want to really look at what the trend is. So right there. Okay, went through it. So now it was at 15%. So now I'm going to bring this up to a 20% position here and probably wait for a 25% to make it a 25% until it can prove itself over there. Whoa, dude, that's not cool. That's not what I signed up for. So now we got to do a bunch of selling. It's the reality. Got to bring this down to a 10% position. Why? Okay, we just had it at a 20% position. Let's go back. We made it a 20% position because it was breaking this downtrend. Our RS line was moving up. But remember, our Quicksand Grateful Dead rules say that when that RS line is above that area, you got to keep at least, it's a holding rule, at least 15%. But when it breaks it, that's a quick signal, because remember, there's the quick in the dead, one of my favorite lines from How to Make Money in Stocks. So at that point, let's go forward. So we're at a 20% here. Now we close back underneath your 21 days, so you bring it back down to a 15% because of that. But then with this RS line going below it, really didn't go below it, just kind of touched it. Thought it touched it earlier. I hope we don't have some software problems, but we just have to deal with the chart that we have. So that RS line is back through that crossing that moving average. So we got to bring it down to a 10% position. Now, if this goes lower in here, we've got to sell another 5%, bring it down to a 5% position. Okay, let's see what happens. Frustrating. Not enough of a reason to buy it back in any big way. So we're now down to a 10% position. Your low is back above your 21 day, so you want to start moving back up. So your RS line is back above here. So I'm going to go back to a 15% position, because what I'm afraid of is if it just gaps through there and I only have a 10% position, if I'm chasing it and trying to make it back up to a 25% position, I'm going to really raise my average costs too much. So that's why I'm trying to at least get it back up to a 15% position here, knowing that if it falls again, I'll have to bring it back down to a 10% position if this RS line does. So again, we're back to a 15% position, goes through that line. We want to bring it up to a 17.5 or a 20. It did it intraday and then failed. So intraday, I'm probably, well, no, I am. I'm not probably. As it's breaking this, I'm making that at least a 17.5% position. And then when it came back through it, then I'm bringing it down to a 15. So you can see that this active trading has its drawbacks, serious drawbacks, because we've got a lot of chop in here and a lot of chop in here. So if you do this and you're sitting there going, well, I really don't want to trade that much, no problem, man. Find the ones that are really material to you and just do more action around there. You could have made it a 25% position right away and said, I'm going to use the Quicksand Grateful Dead rules in here and just sell when those are, being triggered and sell in bigger ways. Or some of you might even want to break it up into even smaller increments and just say, I'm not going to sell or buy more than 2.5% in any one day, which would be 10% of your max, right? If 25% is your max, 2.5% is 10% of that. So it would mean smaller increments. So it would take you 10 days to get out of the stock. That's good and bad. It's good if they can keep going higher. It's bad if they roll heavy. So just be thinking of different ways. Like, that doesn't work for me, but I've thought through that and just go, it's not going to work for me, but it might work for you. So now another upside reversal, but because of the shakeout, I really wanted to go above this area before I'm buying it back, maybe even through 68.50. So we're still at that 15% though. Okay. Sorry. So we were at 15%. Now that we're back up there, we'll probably make it a 17.5% position because we've got this as a line in the sand for that. You could even argue to make it a 20% position because it's kind of a weird shaped cup with high handle type of thing, not textbook. Okay. Now it goes higher. So at this point, now you've got to have a max position. So whether you've made it a 17.5 or a 20% position there, you got to make it a 20% here because, or a 25%, because now we've got lines in the sand. Our 21 day, which we know is worked really well, is right there below us to kind of catch our fall, as Billy Idol would say. And, so you don't have much on the downside. And we know that if it comes in, this RS line is going to have us for that last 15%. So I'm going to make that a max position. Let's see if it works. Just inching up. I would have thought more. Now it's coming in, but it's not really giving you any sell signals. Hasn't triggered the 21 day yet. Probably will do it. Expectation is it's going to do it the next day. But let's see. So, found support there. So you survived. If you did any selling intraday, you reverse that back by the close. So you're still at a 25. If you were slow on the trigger to buy back, you have to buy that back here. So you're at a 20. Regardless, you're at a 25% max position because you want to be even bigger because your 21 day is so close and your 50 day is so close. So look at that. Your 50 day, look closer than that. It's 21% away, and your 21 day is 10% away. But we're up 159% from our pivot. So, we've done well, even with the chopping around. So now we're just at our max position. We can't add. If we had room to add, we'd add there. But we're still at our max. Still at the max, not triggering anything. Not any rules that we've gone over. Okay, we're getting a little worried. It's coming into the 21 day. Okay, found support there. So no harm, no foul. You're still holding because remember, you're up so much on it, you're trying to give it more. When you're only up 5-10%, you're really not giving it much room. But when you're up so much, you can give it a little bit of leeway intraday. And again, it's about where it closes. So it's doing what you would think. Still have our max position. Not doing anything wrong. Really powerful. Really powerful. Super powerful. Okay, climax action again, right? And let's go one more day. Okay. So we've got to recognize that we're now 26 weeks out from here. And this is why I went to a weekly chart. Over here, we said that was climax action because it wasn't a climax top because it was too close to the pivot. Now we're more than the 18 weeks, significantly more. We're 26 weeks out, and your biggest spread in there on the week, closing at the high. So we're in a climax. I'll probably do an episode on climaxes, but if you have this book, let me stop sharing for a second. So if you have this book and you turn to page 263, it's in the When to Sell and Take Your Worthwhile Profits. Bill has all these rules on climax tops. Largest daily price run up, heaviest daily volume, exhaustion gap, climax top activity, signs of distribution, stock splits, and goes on to the next page. Increase consecutive days down, upper channel line, 200-day moving average stuff. He never really used that. Not in real time. And then selling on the way down off the top. So go and get the book and go through that. We're not going to do that in this episode because it will take too long, but I will tell you this is a climax top. But climax tops are only clear in hindsight. Oops. Stop sharing. I'm sitting there looking at the chart and you guys aren't seeing it. That would have been terrible. Okay. So this is a climax top, but it's, how do I say this? It's really hard to get climaxes exactly right because I programmed it in. I never released it, but I programmed it in of all the stuff in Bill's book of climaxes and then put them on the charts. And I would have a little thing where it would say, okay, how many out of those did it trigger? So let's say there were 10 rules. It would say 7 out of 10 rules or 9 out of 10 rules or 6 out of 10. And I put it on charts and you would get that all of the time, and you'd get climax tops so often. But what happens is what we tend to do is our eyes play tricks on us. We look at a stock that is topped after a big move and go, oh, look, there's a climax top. Look, it had 7 out of 8 days up. It had its largest point gain. It had a gap. It's this far from the 200-day. It was a climax top. Well, dude, do that all the way up and you're going to see so many of them. So again, it's me just being intellectually honest after doing the work and saying that you don't really know until after the fact. So you can sell some into a climax top, but selling all into a climax top can be very dangerous. Bill did it here, and he would always say you don't hold any until after. Once you recognize it's a climax top, you sell everything. But I'm just telling you, I'm just doing it differently. It is what it is, But he did this for real and sold it in a couple of days off the top in there. But this is clear climax action, and you can tell that it's running at a certain pace and then it's accelerating. And you can see from here to here so much different. It's a different character. But climax tops can run so much longer than you ever think. And go back to the episode that we did on Axon or Taser and look at those climaxes. And I will just tell you, Bill was asked point blank in real time when it was happening, was that a climax top? And I was at that workshop and him and a head PM both said it wasn't a climax top. And then that was as high as it got. So, not putting anyone down. I'm just being honest in saying how hard it is because climaxes are relatively easy to spot, but top ticking it is something that is, there's a lot of luck involved. So scaling out, it would be my approach, but do it however you want. Study them. So it's still climax, so what you can do is break, you're recognizing this going, I don't know how much further it's going to go. There is something to be said for selling into the strength. So if I know that I'm going to use, the 21-day as well on a defensive sell signal, the 21-day, and then the Quicksand Grateful Dead rules that look at that RS line. That RS line is smoking up there, and it's going to have to come all the way down here before it triggers that sell signal. So in a climax would be the only time that I need to figure out some rules around that of saying sell almost all of it up in there, maybe sell it down to only holding 5%, but holding something until that RS line breaks. But for now, until I get those exact rules, I don't want to data fit it to a sample size of 1, but just knowing how climaxes work, that's the kryptonite of the RS line Quicksand Grateful Dead, because you're going to sell it so much off the top. So you definitely want to take advantage of that, the 25%, bringing it from a 25% position down to a 15% into this climax. So at this point, I would hope that I've sold it down to a 20% position from a 25. Now, with this gap up, this exhaustion gap, after you've already moved up, I'm going to bring this down to just a 15% position. Hopefully. Now, what'll happen is at this time, whatever it's making it move like this, you're thinking, man, this thing is going to go to 200 or 250, because that's the news flow that you're going to be getting. So it's really, really tricky, but I'm going to try to hold that 15%. But really, I think, in here, I should only hold 5%. But part of that is I know what happens. So I'm just being honest, but we're going to stick with our rules. So now you've got a major downside reversal at the highs. That stock is coming in. Even if it's going to continue to go higher, what's normal and natural is for it to come in to at least here. So I'm going to get hosed on this Quicksand Grateful Dead. But we're going to walk through it anyways. So we've sold 5% in on this day, 5% in on this day. So now we're down to our 15% position that we're going to see how bad this gets. But we're also going to pay attention to the 21 day. So now it's down 10%. Oh, the pain. The RS line is getting close there, and I just wanted to trigger so I can sell. Okay, finally. Okay, so now I can sell, and look at what a terrible sell down there. So it's cratered through your 21-day moving average. If you weren't using the Quicksand Grateful Dead rules and you're only using the 21-day, you're out of it completely. It's gone from above 150 to under 100 in a couple days. Like that stock that's why they call them climaxes. Let's look at what it looked like on the weekly going into this. I mean, that's what a climax top looks like on a weekly chart, like the definition of it. But we're now down to a 10% position because remember we've sold. We had it at 25% on this day. Let's just go back. Was it that? Yeah. So we sell it down from a 25% down to a 20% position here. Oh no, it was on this day. I'm sorry. But you could have. Let's just be more conservative. Let's say we're going to sell. And remember, I said the selling in 10%. So let's walk through it this way. Sell 10% of your position. So your position is 25%. So that's 2.5%. So you bring it down to 22.5% position. Now you sell another 2.5% because you're bringing it down to a 20% position. Now you get this massive exhaustion gap. So a gap that happens late in a move after a stock has been running is called an exhaustion gap. And that is by name. It's just anyone who's wanted to buy it is buying it there. And typically it's shorts that have finally gotten squeezed so much that they're getting margin calls and they've got to sell. So that's you're selling it there down to 15% position because you're like, you know what, I still have this 15 that I'm going to have to sell when it comes all the way down in here, and I at least want to lock some in. So we've sold 10% of it into here. So we've got 2.5% sold there, 2.5% sold there, and then 5% sold on this day. And if we could have sold more there, we would have. But now on this day, no, not on that day. On this day. So we break the 21 day. That's very important, but we've already done all of our discretionary selling that we can do. So we've got our quick rule there. So we're selling it down to a 10% position. Doesn't go lower. So we're waiting for that RS line to go lower than there. It's moving back up. I wish we could sell on a weak rebound rally, but we can't because that's not in the rules. Okay, now we're selling again because it's gone back down through there. Let's go lower. Now it's gone lower. So that's a can of worms on that day. So we're going to be very clear on this day is your quicksand, because it's broke your quick there, but you're already down to a 10% position because we haven't added back. And now it's your quicksand on this day. So now you're only down to a 5% position. Now let's do another thing on here. We'll circle back. No, we'll do it now. Let's do the 50% retracement in the other way. So 155, which is our top there, and let's see what our low is, plus 95.88. 95.88 divided by 2 is 125.44. 125. So in here, so using this high and this low. So again, the 50% retracement that we did the other time works the same in reverse, that when something falls dramatically and it bounces up, you can expect it to bounce up to in and around the 50% retracement, but it's not telling you that it's good unless it's in the northern hemisphere. It's in the southern hemisphere. So that means that you need, it's not strong, but we didn't need any other rules to sell because we've already sold everything discretionary that we could. But if you hadn't in on here, that's where you'd be selling into that bounce and getting better prices. And then let's see when we get we're waiting for a Grateful Dead signal. Okay, here, finally get our Grateful Dead signal with our RS line through the longer term one right here. And that is before your 50-day. So that's how that worked out. Let's go out and see how this played out. And again, Bill sold, I think, all of his shares on these 2 days, or at least on these 3 days. And just impressive as can be. He had an ability to really just hold winners like there's nobody else, So let's just see what ends up happening. Still in that lower hemisphere. Just not the same. Now it finally breaks the 50-day. And for those folks who like to wait and use that, you would be out of that. Let's see what it looks like on a weekly. Yeah, that stock is done. Let's go out week by week. And let's just go out a year. So look, it was never the same after that. Yeah, it went up a little bit, but let's go out 10 years. Let's go to a monthly. So that was the peak. I gotta do this silly best fit. So that was the top where Bill was selling it up there. It's just adjusted for splits, and it never came back. For that whole decade. So anybody who says, "Oh, just buy and hold quality stocks, and you got to know what you own," and all that nonsense, you got to use the chart, man. You got to use the chart and some rules. Like, what are you going to do? You're going to just sit with this forever? Let's just do the current day. Yeah. So from here, it took you until 2018 to get back to higher than that. And that happened in April of 99. Like, you don't want to do that, right? You just don't want to do that. One other tidbit that I'll say on this, and let's go back to 1999. Good year for Prince. Okay, so let's zoom out. So one of the observations that I've made, and Bill never said this, and never heard anyone else make this observation, but in studying his best trades, they didn't test him really for the first, I don't know exactly how many weeks, but roughly the first 8 weeks or so, where he was never truly tested. So here was your pivot: one, two, 1, 2, 3, 4, 5, 6, 7, 8. So in and around that area, he had a decent gain, like a really respectable gain there. And what separated him out from me and everyone else that I know is that when he had that gain, he could just let it sit and bake. And remember, as Livermore said, it's not your sitting, it's not your thinking, it's your sitting that makes you the money. And that's what he was able to do, and why I developed these Quicksand Grateful Dead rules to try to help me to settle down, because I look at too much of the noise. I'm watching the market all day long, and I get wiggled and wobbled out of things all the time, that if I was just able to say, okay, I'm 8 weeks into this and I've got a decent gain, I'm willing to let that gain, evaporate, the way he was willing to, um, let it do, because then you can get these things. And that's just next level. You're always, trading is, just going level after level. It's just kind of like school. Like you start off, you're in, what is it, preschool and kindergarten and that stuff. And then you go through elementary school, and then eventually you get your PhD and whatever. And that's kind of where trading is. And so, that's was Bill's level of, PhDs of PhDs of you figuring all that stuff out. And so I had to do to try to be able to, um, hold things where I always get shaken out. I needed to develop these rules, and it took me a long time. And I wish I would have developed them, you know, I had little parts of it, but I didn't really have the whole thing. And you see, like this episode, and I think it was the JDSU one that we did, that there's still things that need to be tweaked. And I have some idea that I don't, a really good idea to change Quicksand Grateful Dead to make it so much easier, clearer, and but I just need to make some changes with the software before we can do that. So just know that in the next year, that we're going to be making some changes to the Quicksand Grateful Dead rules. But wow, that was a long time. That was over 2 hours. Thanks for sticking with me. For those of you who did, I really appreciate it. I hope that you got a lot out of this. And I would also go back and watch the abbreviated version that I did, that, like I said, that Rachel was able to edit down from my IBD Live appearance, where I went through this very quickly. So you can kind of, and I probably said some things on there that I didn't say here, and vice versa, a lot more here than there. But because that's probably like 10 minutes or something like that. I didn't get a chance to listen back to it. I was going to listen to it back to it before I did this, but I didn't want whatever I said to be in my head for doing this. So, because I wanted it to be fresh. That's what I do. I do these fresh, so I'm really not knowing what's going to happen. Of course, I knew that Schwab had a big move and had a climax top, but I'm trying to go through this as intellectually honest. Well, 100% intellectually honest, because I catch myself whenever I'm not, and I'm doing this with myself all the time, and it does no good. It would be like, let's say you go to your golfer and you go into the driving range, and you're or no, let's say you're going to the putting range, right? Or the putting mat, or whatever the thing is called. And you're putting, and you've got a bunch of 20-foot putts that you miss, but you're like, yeah, it's 3 feet away. I'm just going to give it to me. Oh, it's 5 feet away from the hole. I'm going to give it to me. Well, that's not intellectually honest, right? Because how many times do you miss a 3-foot putt or a 5-foot putt? Probably a lot. So you need to finish that out, and that's being intellectually honest. Even 2 inches, like back when I golfed in my 20s, I had to stop because it was very addicting for me. You can see I get addicted to things, and if I'm lucky enough to retire one day, I'll take up golf again. But crazy things happen. You just make a mistake. You get overconfident in a 2-inch putt, you mess it up, and those are the worst, right? Then it goes 3 feet away. So be intellectually honest when you're doing it. Just think back to that. Like you're on that putting green and you're going and you're practicing. Like let it sink in the hole for real. And just the same thing here. Pretend like you don't know what ends up happening. And if you catch yourself um, going heavy right before stock launches, but there really wasn't a reason, or you're selling a bunch because you know that your subconscious knows that it falls apart. Don't do that. Adjust. And err on this. And we did that with this too. With when I was the conflict between the Bill's 8-week rule and the Quicksand Grateful Dead rules. So just always err on the side of safety, because that's going to help you in the real battlefield when Powell's talking, you've got stocks moving all over the place, some other news hits, and you're going, what do I do? You want to fall back on your training. So hopefully you guys have gotten this. We're going to switch into the music thing, which I know a lot of you guys tune out for. So that's fine. No hard feelings. We're switching over to that. And if you can, share these, retweet them, whatever, because it's a little frustrating that not many people are watching, because it's like, man, it's a lot of work and then folks aren't watching. And I see some other videos out there, I'm not going to name any names, but man, like mine's better. I might not be concise. I might not be have structure, but dude, come on, man. Who else is doing this for free? I don't know. So anyways, we are going to switch and we're going to go into music. So if you're new to Webby Rambles On, welcome. And at the end of all of these, with the exception of, I think, only the one that I did last week when I was traveling, we go over a musical guest. And the reason being is I wanted to share with you guys music that I dug, because I think some of you, at least the folks who have good taste in music, will really dig my music. Now, if you have bad taste in music, you're probably going to hate all my music. So we go through a different artist each week, and then we were doing that for a while, and then we switched to albums, because before you know it, we were going to run out of people. So you're wondering who could it be? Well, we've got BB there. It's a king. It's not Marcus. It's not Freddie. Freddie will be soon. It is Albert King. Albert King. Oh my gosh, what a tall dude. Played his guitar backwards. Man, what a monster. And just really dig him. And let me share Spotify, and we are going to just walk through this. Oh shoot, I don't have Spotify open. Let me open up my Spotify so I can share it. Okay. All right. I always mess this stuff up. So we are going to take a look at Albert King. So he's no longer with us. He's one of what people refer to as the three kings: BB, Freddie, and Albert. And we're going to look into his albums. We are going to do this album here. But before we get into that, just wanted to, we touched on this one, Albert King and Stevie Ray Vaughan, on a different episode, but we might circle back and do more on that one because it was so good. And I was thinking of, since he's hardcore blues, I was thinking, how could we get someone who's not into blues into Albert King? So that album would be, where is it? This one, Blues for Elvis, where Albert does the King's tunes, or King does the King's things. And so most people know Elvis, which I love Elvis, been a huge Elvis fan my whole life. And these are all Elvis tunes, Hound Dog, cool tune. Not my favorite. Jailhouse Rock is fun. Everyone loves Heartbreak Hotel. Don't Be Cruel. I mean, how could you not like Blue Suede Shoes or Love Me Tender? But really, what is the best song on here? That's All Right. Oh, man. It does not get better. I don't know why it doesn't have many plays, but That's All Right. Elvis's version is great. This is great. I love it's one of my favorite Elvis tunes. But anyways, we are going to the album we're going to go into is really the big one, and that is Born Under a Bad Sign, which is the best song by a country mile on this album, Born Under a Bad Sign. You know, if I didn't have good luck, if I didn't have bad luck, I wouldn't have no luck at all. And I feel like that all the time. Don't let the smile fool you. So it is what it is. So the Born Under a Bad Sign, you got to listen to that tune. If you don't like that tune, I don't know how to help you. Go to the emergency room, get some help, go to an ear doctor. It's just a great tune. A lot of people have done it. And other ones, like Crosscut Saw, that's a really good song. Clapton did that. A lot of people have done a lot of these songs. Oh, Pretty Woman. I think Kenny Wayne Shepherd did a really good version of that, if I'm not mistaken. Even all the way down to like Laundromat Blues. Um, you know, all these are good, but Born Under a Bad Sign is really the best thing on here. So let me stop sharing. And so that is Albert King. And man, what a giant he was in a lot of different ways. So that's the end of this episode. As we say on each one of these, the WRO family is trying to make a difference in the world. And so I'm not asking you to pay for any of these things. I'm just asking you to do one thing, is to do a kind act for someone. It could be a stranger, could be a friend or a family member. Just for every episode that you watch, just do a kind thing. You don't have to tell anybody about it. The best ones are ones that you don't, tell anybody about. And the more things that we do like that, we can complain about the world being terrible and all the problems in the world, or we could just try to be a part of the solution. And I think part of the solution is just being kind. Am I kind all the time? Do I make mistakes? I make mistakes all the time. I get frustrated with people, I'm not perfect, and I don't claim to be, but whenever I make a mistake, I apologize, and that's a big important thing. And I see a lot of people who make mistakes, and they don't apologize, and apologize often, is what you should do when you make a mistake. That's another act of being kind, because deep down inside when you made a mistake, and just, own it, own it. And I think some people lose respect in you when you apologize for things. Those are people you don't need in your life. And again, a lot of this, messages from my kids and grandkids. So just, be kind out there. There was one, so it's funny. One of the things I've always done is whenever I'm around people, I that are taking pictures, and this happened a lot on my road trip, which again, I'm going to do an episode on that, is I've always, not always, what happened is when my twins were young, and digital cameras were not even really a thing, they were just starting off, but a lot of it was still film cameras. And so I would always take a picture of them with their mother. And so when I would go back and I look at a lot of the baby pictures, I was like, where am I? Well, I was the one taking the picture. And when I recognized that, it really bothered me so much that I made an effort whenever I saw family, especially a father taking a picture of the kids, I would always say, hey, do you want me to take a picture? And it just became a thing that I'm always doing, and something that's a very easy thing to do, And so when I was at Crater Lake, which was I'm not even going to say, I was at Crater Lake up in Oregon on the thing, and I kept asking people, because it was such a beautiful place to take pictures. I'm like, do you want me to take your picture? And most people probably say yes, or, oh no, we're okay. And there's this one old couple, and you got to remember, I'm like, looking like I'm pseudo homeless, like how I always look, and kind of dressed like this. And I'm there, and there's this really older gentleman with his wife, and I could tell I'd seen him taking pictures of her before, and I went up to him like, hey, like really animated. Normally I'm just like, hey, would you like me to take your picture? But I knew that he really wanted his picture with his wife. And I'm like, hey, I see someone who wants to get their picture taken, And he's like, no, no, no. Obviously, he thought I was like wanting something from him, or I was going to steal his camera, or I wanted him to pay me for the picture or something. Like you have those folks who go around at restaurants and take your picture and then charge you like $30 for something you could take with your phone. And so it's like, do dial it down, like if you're going to try to help someone because you're trying to do a kind thing. And I could tell like I kind of freaked him out because he was in his late 80s, and I was just trying to help him and his wife out because they look like such a cute couple. And so anyways, just be careful, like I'll just try to help people out, but just do it in a way that's not going to scare them. But with that said, man, 2 hours, 25 minutes of just straight to the point structure, or not. All right. Peace out till next time.